All right, welcome back to Talk Tickers. Got a really interesting earnings call transcript sent in by one of you listeners, and we're going to dive deep into it.
Yeah, definitely some stuff to unpack here.
So right off the bat, just give us the overall snapshot. What were the big headlines from this earnings call? What jumped out at you?
I think the main thing that really grabbed my attention was, they didn't quite hit those big revenue growth numbers that some people are expecting, but at the same time, they managed to boost their profitability significantly.
Okay, so it's kind of like a mixed bag then. Revenue's up, but maybe not as much as some analysts were hoping for, but the profits, the bottom line is looking pretty good.
Exactly. They saw a pretty solid jump in net income, which is kind of surprising given the revenue situation.
Wow.
So that begs the question, how did they pull that off?
Right. So what's the secret sauce here? How are they making more money even if the sales aren't skyrocketing?
Well, from what they laid out in the call, it sounds like they've been laser focused on cutting costs and getting more efficient with their operations. They also mentioned seeing some nice expansion in their gross margins.
Okay, and just for those who maybe aren't as familiar with the financial jargon, what does that tell us about the company when we see those gross margins expanding?
Well, think of it this way. Higher gross margins could mean a couple of things. It could mean they're able to charge a bit more for their products or services, meaning they have stronger pricing power in the market. Or it could mean they're getting better deals on the stuff they need to make their products, like their raw materials are costing them less. Either way, it's generally a positive sign.
So they're either becoming more of a premium brand that people are willing to pay extra for, or they're getting really good at negotiating those supplier contracts and keeping their costs down. Both pretty good scenarios to be in.
Yeah, for sure. And they really hammered home this whole efficiency thing throughout the call. They talked a lot about streamlining processes, cutting unnecessary expenses, and really just squeezing more value out of every dollar they spend.
So it sounds like it's not just about one-time cost cuts, but like a real fundamental shift in how they're running the business, trying to become leaner and meaner.
Exactly. And it seems to be paying off. They specifically highlighted some new technologies they've implemented that have helped to automate a lot of their processes. So you can imagine that probably means fewer manual tasks, less time wasted, and ultimately lower overhead costs.
It's like they're embracing that whole digital transformation thing we keep hearing about, but actually making it work for them on the bottom line.
Right. And another interesting thing they mentioned is that they've been strategically shifting their focus to products that have higher profit margins. So not just selling more, but selling smarter, going after the stuff that brings in more profit per unit.
So it's like a double whammy. They're getting more efficient with their overall operations, and they're also shifting their product mix towards higher margin stuff. Sounds like a recipe for success, at least on the profitability front.
Yep, definitely seems like they're onto something.
Now, what about the future? Did they give us any hints about what they expect to happen in the coming quarters, what we can look forward to?
Yeah, they actually provided some pretty specific projections for the next fiscal year. On the revenue side, they're still expecting moderate growth, not like huge jumps, but continued steady progress.
So not shooting for the moon on revenue, but staying grounded and realistic. Makes sense given the current economic climate.
Right, exactly. But when it comes to profitability and cash flow, they're forecasting further improvements. They seem pretty confident that those efficiency initiatives we talked about are going to keep paying dividends, and they're optimistic about the market for their core products.
So even if the revenue growth is more on the steady side, they're expecting to keep squeezing more profit out of that revenue.
Yeah.
That's got to be music to investors' ears.
Absolutely. And there was this one phrase they kept using, which I think captures their overall strategy pretty well: synergistic value realization. Basically, what they mean is they're expecting to see even more benefits from some of the companies they've acquired recently.
So they're not just buying up companies for the sake of it, but they have a plan to integrate those businesses and extract more value from the combined entity.
Right. It's about leveraging those combined resources, streamlining operations, and ultimately creating a whole that's greater than the sum of its parts.
All right, so let's take a step back and put on our investor hats for a second. Why should all this matter to someone who's thinking about putting their hard-earned money into this company?
Well, I think the big takeaway here is that they're showing they can significantly improve profitability even when revenue growth isn't explosive. That can be a really powerful signal. It suggests a more resilient and maybe even a more sustainable business model, especially in uncertain economic times.
So it's not just about chasing growth at all costs, but about building a business that can weather the storms and deliver consistent value over the long term.
Exactly. And their focus on efficiency, those higher margin products, and this whole synergistic value realization thing all point to their commitment to creating that long-term value. Plus, the specific guidance they gave gives investors a clear benchmark to measure their progress against.
So it's not just a bunch of fluffy talk. They're putting some numbers behind their promises, which is always reassuring for investors.
Yeah, for sure.
Now, let's zoom out even further and think about the bigger picture. How might this earnings call and what this company is doing impact their whole sector and even the broader market?
That's an interesting question. I think this emphasis on cost efficiency and expanding profit margins could potentially become a bit of a trendsetter for other companies in their sector.
So they could be like the pioneers, showing everyone else that it's not just about chasing revenue, but about becoming more profitable with the revenue you already have.
Yeah, especially for those companies that are struggling to achieve that super fast revenue growth, they might look at this company as a model. If they can consistently demonstrate that they can really boost their bottom line through operational excellence, it could put pressure on their competitors to step up their game.
It's like a rising tide lifts all boats, but in this case, it's more like a super efficient boat showing everyone else how it's done.
Exactly. And in the broader market, this focus on profitability over just pure revenue size could resonate with a lot of investors, especially right now when economic uncertainty is high. Investors are increasingly looking for companies that are not just growing fast, but growing profitably and sustainably.
Makes sense. When times are tough, you want to know that the companies you're investing in can make money even if the economy isn't booming.
Right.
Okay, so we've talked about the numbers, we've talked about the big picture, but what about those subtle hints, those things that weren't explicitly stated, but that maybe jumped out at you as an experienced analyst? What are the signals that you're picking up on?
I think for me, the biggest signal is just the consistency and the clarity with which they talked about operational efficiency. It wasn't just a one-off mention, it was woven throughout the entire call.
So it's not just something they're saying to appease investors. It really seems to be baked into their DNA now.
Yeah, and the fact that we see the concrete evidence of those improved gross and net margins further reinforces that. This is not just talk, they're walking the walk.
They're putting their money where their mouth is, so to speak.
Exactly. And another thing to watch is just the confidence they exuded when they talked about their projections for the future. They weren't just throwing numbers out there, they had very specific initiatives and strategies that they believe will drive those results.
So they're not just hoping for the best, they have a plan and they're executing on it. That's always a good sign.
Yeah, definitely. And any significant deviation from that guidance in future calls would be a pretty big red flag. It would suggest that maybe things aren't going as smoothly as they anticipated.
So keep a close eye on those future earnings reports. See if they're able to deliver on those promises.
Exactly.
All right, now for the fun part. Let's put on our speculative hats for a moment. This is not financial advice segment, where we explore some out-of-the-box trade ideas based purely on the insights we've gleaned from this earnings call.
All right, so let's imagine we're sitting in a swanky hedge fund office, pitching an idea to the investment committee.
Think big, think bold, think a little bit crazy, but still grounded in the reality of what we've learned today.
Okay, here's the pitch. We know that the market might have a bit of a lukewarm reaction to the slightly lower revenue growth that this company reported. Some investors might get spooked, and there could be a temporary dip in the stock price.
So we're playing on the market's short-sightedness, capitalizing on their obsession with those top-line revenue numbers.
Exactly. But we, as savvy investors, see the bigger picture. We recognize that this company is undergoing a fundamental shift, becoming incredibly efficient and profitable. We believe the market is undervaluing this transformation, focusing too much on that one revenue number. So our trade idea, and remember, this is purely hypothetical, is to establish a long position in this company. We buy the stock, betting that its true value will eventually be recognized.
Okay, classic long play. We're betting the stock price goes up, but where's the out-of-the-box part? Where's the spice?
Here's the spice. We hedge this long position by simultaneously taking short positions in two of their direct competitors. Specifically, we target those competitors who haven't shown that same level of commitment to boosting their bottom line through efficiency measures.
So we're not just betting on this company to succeed, we're betting on them to outperform their less efficient rivals.
Exactly. It's a relative value play. We're saying this company is going to do better than the others, and we're positioning ourselves to profit from that outperformance. The hedge, the short positions on the competitors, protects us against any broader downturns in the sector.
So even if the whole sector takes a hit, we're still insulated because we're betting on this company to outperform. And if our thesis is right, if they really do shine compared to their peers, then our gains are magnified.
Precisely. It's all about recognizing that disconnect between the market's initial reaction and the longer-term implications of a significantly more efficient and profitable operation. And historically speaking, those kinds of companies tend to be rewarded by the market eventually.
So it's a bold move,
Mm-hmm.
but it's directly rooted in the underlying trends we've seen in this earnings call.
Absolutely.
All right, well, that's a pretty compelling, albeit hypothetical, trade idea. And just to reiterate, this is all purely for educational purposes. We are not giving financial advice here. Any investment decisions you make should be based on your own thorough research and due diligence.
Couldn't agree more.
So for those of you listening, what were your key takeaways from this earnings call? Did anything surprise you? Did anything make you rethink your investment thesis? We'd love to hear your thoughts, so feel free to share them with us.
Yeah, jump into the comments. Let us know what you're thinking.
And that's it for this deep dive. Thanks for joining us here on Talk Tickers, and we'll catch you next time for another insightful exploration of the financial world.